Hi, good morning everyone. My name is Ram Dhamija. Welcome to my channel. Today is 13th of September and it's a Saturday. The topic for today's video are two. One is we will evaluate the performance of the market that has happened in the last 3 months, specifically with regards to sectors. And I will give an overview on some of the mutual fund categories which have been doing well and how you should position yourself for that. So let's begin today's video. I'm going to cover a detailed analysis of the market analysis for next week. That video I'll be coming out with tomorrow, but today is more of analysis of how the performance has been and how the various sectors have performed and how the mutual fund categories have performed. So I'll do a deep dive in that and hopefully you will find the video useful. So let us begin. Let us start off with firstly the market performance as we had talked about. So this is the market performance chart that you can see across various sectors. As you can see over here, Nifty first, let's start off with Nifty because that is the base. So Nifty, if you see over the last 1 week has gone up by 1.5%. So I'll talk about Nifty more in tomorrow's video. But if you look at 1 month return, Nifty is about 1.96. So basically it's in a consolidation phase right now. So it's like slightly up, slightly down. But if you look at the YTD number, it is at about 6%. So YTD is a good number. And 1 year performance has been absolutely flat. Now this typically happens rarely, wherein you will see Nifty down or flat for 1 full year, and whenever that happens it's actually a good time to accumulate. That has been the previous experience. I know that a lot of you will have this in mind, that what is the price earning ratio, what is the price to book ratio, how are the interest rates in the economy, and so on and so forth. All those things are fine, but I'm saying as a broad general rule, markets tend to mean revert. So if the returns in the market for last 1 year have been flat to negative, then the markets perhaps are in a good place. At least they are much better than what they were last year same time, as long as the earnings are going up. So Nifty has been flat over the last 1 year. Now let us look at what has been the performance of the various sectors over the last 1 month. So if you look at it, autos has been the best performing sector, and you can see over there the auto rally has just started in the last basically 1 month after the GST announcement. Because if you see last 1 year, auto has been just given 4% and 11% of that has come in the last 1 month. So basically autos was hugely negative before the GST announcement. Metals is something interesting which is picking up. So this is actually a move towards the international assets, I would say, because internationally money is also moving towards hard assets, towards metals. As we are seeing, precious metals have started rallying. So metals has been doing well, and last 1 month it has given 7% return. MNC again, a lot of it is driven by the GST cut, because a lot of these MNCs are in the consumption sector, etc., like Nestle and so on, which have done well, Nestle, Levers, and all the consumption names. So that is one sector that has done well. IT has done okay for the last 1 month, and that is primarily because of the news on the Infosys buyback. But IT, if you see, YTD is -16 and 1 year is -16, so it's not done all that well. The sectors which have been laggards, banking is a notable one. So banking, after doing really well, has slipped. So we can see how the money flow is changing from the other sectors, from banking to the other sectors, and that is banking was a poster boy. When Nifty was not doing too much, banking was making new highs. So that has kind of reversed. Now let us see how the situation is in terms of the mutual fund categories. So for those of you who don't know, I am a mutual fund distributor, advisor as well. I help people build mutual fund portfolios, and if anyone is interested in getting the mutual fund portfolio evaluated or building a new one, they can fill up the Google form which is there in the description box. So once you fill that up, then I will get back to you. We'll have a nice discussion, and then I will tell you how I help people build their mutual fund portfolios. This is free of cost, and a lot of times people do need a hand holding. Even if you have an existing mutual fund portfolio and want to get evaluated, I shall do that. So let's get back to the mutual fund performance. If you look at it over here, the best performing for the last 3 months has been equity in international. So all the international equity funds have done well, and I will deep dive into that which are the ones that have done well. So for example, NASDAQ has been doing really well. So US markets have been on a tear, China has been on a tear, and I had said that all the other world markets, Japan, Europe, etc., everything is doing well. So our markets have been laggards that way. But if you look at, so that is where, also a lot of times diversification helps. So if you have equity international in your portfolio, then even if the domestic markets are not doing well, your portfolio will still continue to do well. If you have gold in your portfolio, if the equity markets are not doing well, your portfolio will still continue to do well. So these are some of the things that help mitigate the impact of markets not doing well at certain points in time. The So let us deep dive into equity international and see which ones are doing well. So you can see over here in the last 1 year, Mire Asset, Hang Seng Tech. So Hang Seng has been doing well. World Gold Mining Overseas Fund has been doing well. So as I said, movement towards hard assets. Again, Hang Seng. Then NYSE FANG plus ETF has done really well. So these are some of the ones that have done well. So Hang Seng, NASDAQ, FANG, and gold mining. So these are some of the things that have done really well in international funds. Now let us come to the next best category, which is the thematic consumption. Now why consumption? Because consumption and MNC, I would say, have done well primarily because of GST cut. So there is no rocket science behind it, and you can see consumption was a big laggard for last 1 year. Even after doing so well for last 1 month, it is down -5. So before this GST news, this was -8%. So consumption was lagging behind big time, but that has started to do well. The next best category is MNC that we have discussed, followed by last 1 month, followed by thematic, which is okay. Technology, as I said, has made a comeback. Large and mid cap as a category is done okay, and then mid and small cap. So there is something interesting that is happening in mid and small cap also, that I will discuss tomorrow in tomorrow's video, that they are starting to make some sort of a comeback. Mid cap not so much, because they're too overpriced in my opinion. But small caps, if you find value in that particular sector, if the market starts to do well and market clears the all-time high, then small caps perhaps can start to rally again. And also, sectors like momentum, alpha, etc. will come to the party. These are the sectors that have been lagging behind for last 1 year. So if you look at the momentum index and the alpha index, they are down almost -20% from the peak that they made in September. So they come to the fore when the next bull run comes in. So now let's say if the next bull run starts once we clear 26,200, let's for discussion's sake say that it starts in March 26, for example, just a random number we have picked up. So you will see initially that the movement will be led by the large caps and the quality names, etc. But once the bull market starts to mature a bit, then you will see the outperformance come in from momentum alpha names. So the -20% that you are seeing suddenly goes to +40%. So I'm saying that investing when the markets are down is the best strategy that one can follow, because of course you're getting something which is available for much less intrinsic value than it was last year. So a lot of these names are going to start performing once the markets recover. So let us come back to the sheet and see which are the other sectors that have done well. Flexi cap has done well, large cap has done well. Now the sectors that have not really performed in the last 1 month: banking. So this is something that we have already discussed: energy and PSU. So these are the laggards that are there in the equity segment. Now let us look at the debt segment, so debt there's no point seeing for 1 month, but let us look at for 1 year. So credit risk as a category has done really well. So it is up by 10%. Now whether one should invest in credit risk or not, that again depends on the risk profile of the individual person. But if anyone needs more information on that, they can contact me and I shall try to help you on that one. Medium duration has done well because the interest rates have been coming down. So whenever interest rates come down, medium duration bonds actually do really well. So they are given 8% return. Corporate bonds are given 8%. Gilt has given 7.9%. So gilt has actually given much more, but the returns have slightly come down. Now let us see which are the ones that have not done so well. Long duration has not done well. Dynamic bonds haven't done well in the last 1 year. Some category. Overnight, yeah. So overnight hasn't done really well. It's given 6%. Not really well, but overnight actually gives you around this much only. So 6% is fine in my opinion. Liquid is given 6.8. See, some a couple of years back, all these categories were giving 5, 5, 6, 6%. I remember liquid funds were giving 5% and so on. This was when there was COVID time, and a couple of years after that, when international bond rates were zero and even negative in some countries. So even in our country, the interest rates were much lower, and this is before pre-inflation scare of 2022. So from there, liquid funds have actually, last year I remember liquid funds, most of them have given around 7% return. So we have seen a shift from 4 to 5% to 7%. Now this typically happens when the interest rates are coming down, but when interest rates start to rise, then the rates on the returns on these funds actually goes down. So one has to be very careful in debt. Debt is not as simple as even equity is not simple, but debt is even more complex than equity. So if you want to invest in debt funds, again, you need some hand holding over there, because it's very easy to go wrong over there. So as I said, again, if anyone is interested, they can fill up the form to know more. Now let us look at the hybrid category. Hybrid arbitrage has given 6% and multi-asset allocation has given 6%. So multi-asset allocation is also a good way to invest, because it has exposure to gold, etc. in it. Arbitrage funds are basically used as liquid funds, but they are tax efficient because they're taxed at equity rates. Yeah, so this is one chart I wanted to show you to show you how the Chinese markets have done really well. So let's say I picked up one Mere Asset Tech Hang Seng Tech fund. Now you look at it over here. This is with respect to BSE 500. Look at the outperformance. So BSE 500 over the last 1 year has given minus 1.31% return, whereas this tech fund has given 96% return, and international equities are given 30% return. So this is basically coming back to the point that your investments need to be diversified. They can't be holed up into one particular asset class or one particular sector. I've seen these mistakes being committed by a lot of my clients. When they come to me and with their portfolios, I've seen they will put it in one fund, a huge amount of capital. They will put it in mid and small cap only, their entire capital. A lot of my clients had put it in momentum names. Okay, now that is not a very well rounded way to make the portfolio. And then what happens is that they don't realize that they have actually lost out on the time value. Now, what happened in, let's say, in momentum? Last 1 year, it has given minus 20%. It's not performed. Now, anyone who came in last year at the peak of the bull run would have seen last 3 years returns, 5 years return, and put it in momentum portfolio. And momentum over there has been the worst performing. So, that is where I think the importance of handholding comes in, of a mutual fund distributor, advisor, whatever you might have it. Who can help you avoid such obvious mistakes. And if you had made a well-rounded portfolio last 1 year, you would have saved that 20% fall which is already there. So that is where it becomes very important, because this is the work that we do day in and day out, right? So we have seen a lot of cycles and we understand how each product behaves. So this is so that was about this Hang Seng returns. Now what else is there? Gold and silver. This is another thing that I have covered earlier. The gold returns. Gold is at an all-time high, which again I said should be part of your portfolio. This I have covered in a lot of details, but basically the point is that gold returns again have been phenomenal. So if you look at it over here, last 6 months 25%, last 1 year is 44%, last 5 years is 90% return. So gold is continuing to do well and it is making all-time high. Again, it should be part of your portfolio. And this is the gold to Nifty ratio. If anyone thinks that gold is overvalued or whatever, you can have a look at this ratio. This ratio peaked in 2020 when markets had collapsed to 0.21, and we are still at 0.14. So it's come out from this bottom which was made in somewhere in 22 from 0.08 to 2.14. So it is not that it is egregiously high. Of course, no one can predict where gold is going to go, but the ratio is not egregiously high. Similarly, silver has broken out. It is at 42.83. The high of silver is 50 in US dollar terms. That also looks like it might just get breached anytime soon. So that was that about the various categories of mutual funds and how they have performed, and how the sectors have performed. So I thought I'll do this video today just to give you a glimpse about the performance and how you should structure your portfolios, etc. Tomorrow I'm going to do a deep dive on the markets for next week and how I see the markets and where they are headed. And right now everything is looking bullish, which I had covered in my last video as well, and markets are obliging as of now. So it is very, very important that if you are not in the markets, then at least have some exposure, right? Because missing out on rallies, typically what will happen is if you don't have an exposure right now, you will enter the markets when the markets are at an all-time high. And so there are various ways to make a portfolio also. If you think that the markets are overvalued right now, there are some lesser risky options that you can take in terms of mutual funds as well. So there are various ways to go about it, but the whole moot point is that being invested really helps. So that's it from me now. It was a slightly different kind of a video I made today, and I shall see you tomorrow with the analysis for the markets and the next week ahead, and what are the levels that we need to watch out for, and what is the other news flow that is going on. I hope you enjoyed the video. If you did, please do like and please do subscribe to my channel, and I shall see you soon with another update. Take care. Bye bye.